Hello and welcome to Mint's weekly corporate roundup. As always, we have a set of three important stories from three of our reporters. First, we have Anirudh Laskar, who will take us through the deal between Reliance Capital and Japan's Sumitomo Mitsui. Anirudh?
Sumitomo Mitsui and Reliance Capital yesterday entered a strategic partnership where Sumitomo Mitsui would be picking up 2.77% stake in Reliance Capital. This is probably the first deal between Reliance Capital at the parent level and foreign bank, foreign entity. What analysts are saying that this might just be a signal that going forward, Reliance Capital might get more the stake and support from Sumitomo Mitsui as and when required. But at this point in time, people are not saying that it will help Reliance Capital or the group to pay its debt, because at the group level they have a huge debt. This deal was closed for a consideration of 370 crore, which is about 530 rupees per share of Reliance Capital, a marginal premium. But as the analysts are saying that this might just be a signal that going forward Sumitomo would be extending its support to Reliance as and when required for its expansion.
Thanks, Anirudh. Next, we have Swaraj Singh Dhanjal, who will take us through the latest developments in SpiceJet, which recently announced that it was going the same way as Kingfisher. But Swaraj has more details.
Hi Pramit. So Ajay Singh, who was the co-founder of SpiceJet Limited, who sold his entire stake in 2010, is now back, and he has teamed up with a fund of JP Morgan and Chase company. So the duo is expected to submit their investment plan to the Ministry of Aviation today, and it is expected that the two will buy out Kalainithi Maran's 58% stake in SpiceJet Limited for almost. So they're expected to invest around 1,200 crore at least to buy out his stake. Kalainithi Maran is the owner of Sun TV Group, the Chennai-based media company. So we all know that SpiceJet has been in the news recently for a lot of problems which cropped up because of financial troubles at the airline. In December, the company had cancelled almost 1,800 flights, and recently oil companies had stopped stopped giving supplies to the company. After which the Ministry of Aviation came in and asked banks to give short-term working capital loans of 600 crores to the company, and also asked the oil companies to extend credit lines by almost 2 weeks. So this is what is happening right now in at SpiceJet Limited, with the co-founder now looking to come back and take over the reins of the company.
Thank you, Swaraj. Next, we have Pooja Sarkar, who will take us through the deal between Jaiprakash Associates and Ultratech Cement. Pooja.
Aditya Birla Group, which has the largest cement unit in India at this point in time, has acquired 2 cement units and a power plant from Jaiprakash Associates for a consideration for around 5,400 crores. Earlier last year, they had acquired another asset of JP Associates. This year has been the year for consolidation in terms of cement assets and power assets, and most of the assets have been sold by JP Associates, which has a debt of around 60,000 crores, and bankers have been pushing all these guys to go out and sell assets and reduce debt on their books.
Thank you, Pooja. That was all for this week. Please log into www.lifemint.com for further updates. Thank you.